This hearing will be in the nomination we consider today represents another step in President Biden's efforts to rebuild our economy. The president is putting results over partisanship, evidenced by the gentleman sitting at the table, renominating a Federal Reserve chair of the other political party.
I intend to vote in favor of extending your chairmanship. Let me briefly explain why. There's a broad bipartisan backing for Chairman Powell's renomination because he has a record of acting thoughtfully and constructively, especially in some very difficult circumstances.
Testify before any duly constituted committee of the United States Senate. Thank you.
Today, the economy is expanding at its fastest pace in many years, and the labor market is again strong. As always, challenges remain. Both the individual shutdown and the subsequent reopening of the economy were without precedent. The economy has rapidly gained strength despite the ongoing pandemic, giving rise to persistent supply and demand imbalances and bottlenecks, and to elevated inflation. We know that high inflation exacts a toll, particularly for those less able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to achieving our statutory goals of maximum employment and price stability. We will use our tools to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. We can begin to see that the post-pandemic economy is likely to be different in some respects, and the pursuit of our goals will need to take those differences into account. To that end, monetary policy must take a broad and forward-looking view, keeping pace with an ever-evolving economy. If we see inflation persisting at high levels longer than expected, then we will, if we have to raise interest rates more over time, we will. We will use our tools to get inflation back, and the main reason is this, that to get the kind of very strong labor market we want with high participation, it's going to take a long expansion. We can see that participation is moving only very slowly, and to get a long expansion, we're going to need price stability.
Right.
And so in a way, high inflation is a severe threat to the achievement of maximum employment and to achieving a long expansion that can give us that. Right now, we're stimulating demand with very highly accommodative policy. As we move through this year, we will, in all likelihood, we don't know the future, but if things develop as expected, we'll be normalizing policy, meaning we're going to end our asset purchases in March, meaning we'll be raising rates over the course of the year. At some point, perhaps later this year, we will start to allow the balance sheet to run off. And that's just the road to normalizing policy. That's what we're going to be doing.